Today's episode is not just your run-of-the-mill property management. Tune in to learn from Gregg Cohen and find how his passion of revitalization is going to lead to the next great American downtown and how you can invest all around that city. This presentation is for educational purposes only. American IRA, headquartered in Sioux Falls, South Dakota, is a neutral third-party administrator on behalf of the custodian New Vision Trust Company, a state-chartered trust company based in South Dakota also, and does not offer investment advice or endorsements. We are not responsible for statements made by others, and references to we and us refer to American IRA only. We encourage you to do your own due diligence and consult with qualified professionals before making any investment decisions. Hi, and welcome again to another installment of the IRA Cafe powered by American IRA. We welcome everyone joining us here on the noon hour on the East Coast, and those of you who are probably still sipping your coffee on the West Coast. Also, everyone in between. And I am Kyle Moody in the Business Development Office at American IRA, and we're so pleased that you're with us today. So if you've ever wondered, again, how you can use your self-directed IRA and some of the asset classes that are out there, and you haven't gotten into this yet, real estate is always one of the top places that folks like to put their funds when investing. And today, we're going to be joined by Gregg Cohen, who is the founder of JWB Real Estate Capital. It's a great company. He's been in business basically as long as American IRA has, about 2 decades, if memory serves me correctly. And you're going to hear terms today like the next great American downtown and the power of just one property. And believe it or not, he does all of this business in the town of Jacksonville, Florida. So he's going to tell you about how that company came into being, a little bit of his background, how his investors that are spread, believe it or not, in, if I'm also remembering correctly, 49 different states and about 13 countries, and how all of that has built his company to that size with all of those folks, again, in just one city in the United States. So without further ado, I want to turn it over to Gregg Cohen and also let you know, everyone, that you're going to hear a great presentation from him, and make sure to get your questions in that you might have for Gregg, and he will answer those at the end of his presentation. So Gregg, take it away.
All right, Kyle, thank you so much for having me here on the cafe. And I'm just so excited to be a part of this talk with you all here today, getting to talk about something that I love, that I've been investing in for just about 20 years now, and has really, brought an incredible amount of opportunities to myself, but more importantly, to all of our clients. And we do get the opportunity to serve clients. Over 1,700 clients have followed the JWB model of investing in single-family rental properties. We get to manage over $1 billion of real estate investments, and that's a big responsibility, but it's so cool because we get to see how rental property investing, the things that is right underneath our nose, that we can look outside our window and see beautiful single-family homes as rental properties, that can pave the way. That can be an asset class that can help you grow your IRA or solo 401k, or even outside of your retirement accounts. It's something that's as I get to spend this 30 minutes, an hour with you, I'm truly speaking from the heart, and I hope you guys are excited about learning a little bit more today. This is not going to be the same old talk about rental property investing, though. What I'm going to share with you today is a strategy that I don't think I've heard anybody else talk about. It's going to be combining elements of looking at what the next great American downtown looks like, and how do you spot that? And then how can you marry that understanding and that power when it comes to home price appreciation and rent price appreciation and median income growth and job growth? How can you marry that power with these beautiful, simple, easy to understand, easy to acquire single family rental properties? So we're going to get into that throughout the presentation, but I just kind of like to start a little bit about my story and why I love this asset class so much. For me, I started about 20 years ago, and I never thought I would be sitting here 20 years later sharing my love of single family rental properties and real estate. I didn't come from a real estate background. I thought my path was going to take me, and it did take me to corporate America. And I thought I was going to work my way up there. And you know what? It just didn't work out for me. About 2 years into that journey, I realized that, I needed a change. And I believe everything happens for a reason, and great things happen in times of distress. And that was a time of distress for me, because I thought my path was this, and then I realized that it wasn't. And a friend of mine gave me this amazing book called Rich Dad, Poor Dad. I usually carry it with me wherever I go. Actually, I don't have it here right now. But Rich Dad, Poor Dad is a book that changed my life. If you haven't read it, please read it. Just know that it's very powerful. I read that book. It took me maybe 3 or 4 hours. I put the book down. It was in the middle of the night. And I remember looking at myself in the mirror, and I said, I'm going to start my own real estate investment company. And if any of you do know me, or hopefully I get to know you, you'll understand that I'm just not wired that way. I'm not a serial entrepreneur, even though I've been one for 20 years now. Was not raised by a family of entrepreneurs. It was the farthest thing from my mindset. But what I knew and what I understood from that book is the power of investing, and the power of what we call minding your own business, which is thinking beyond just the day-to-day income that you earn from your daily activity, and thinking about a great way, and that you are the master of that other business that you have. Even if you're not an entrepreneur, you're the master of your investment business. And we got to think through and manage that business very, very well. One of the things that you all do very well already is by being here on the IRA Cafe, because that's not normal. That's not what the average investor does. They tend to turn their mind off. So congratulations for being here. That book changed my life. It then set me on a journey to really finding my passion in single family rental properties. There we go. That beautiful book right there. If you haven't read that book, go ahead and buy it and read it. For me, what that book led me to understand is that this beautiful asset class that most people look over and think of maybe as a stepping stone, or find reasons to not invest in, I could build my own financial future through a portfolio of single family rental properties. So I started to buy them in 2006 and 2007. I have 3 business partners. At that time, I only had 1 business partner. I now have 3, but in the beginning, it was just me and 1 other business partner. We were 20-something. And we started to learn about how we could acquire these properties. We bought about 40 rental properties in 2006 and 2007, which, if anybody was investing at that time, we knew what happened in 2008 through 2011. It was an interesting time in real estate, to say the least. But I knew that the fundamentals of this asset class, single family rental properties, were strong. And that even though it was a tough time from 2008 to 2011 as far as home prices, it didn't matter to me. It didn't matter to my retirement account or my future, my financial future, because I was going to hold on to those assets regardless. And guess what? The rents still came in. The positive cash flow was still there. The tax savings, the home price appreciation wasn't there then, but guess what? It did happen. And that's what happens in real estate. Over time, cycles work. Things are cyclical. And of course, home prices have rebounded tremendously. In fact, the home prices and the returns that I have on those single family rental properties are better. They're better than what I would have received in other asset classes as well. So much that I learned through that process has allowed us to, of course, do this for ourselves. But then we started to think about how we could do this for others. And we built a company, JWB Real Estate Capital, that, again, builds real estate portfolios and handles all of the property management for our clients. And we just love this asset class. We love what this asset class can do for others. And and today I get to kind of share a little bit more about that. Specifically, the thing that I think many people don't understand about this asset class is they kind of think myopically about it. Specifically, they think about things like cash flow. And cash flow is very important when it comes to a single family rental property, but it's not the only thing, right? If cash flow was the only reason, the only benefit of a single family rental property, it probably wouldn't be worth it to buy it, to be quite honest. The real value in owning single family rental properties comes from all 5 profit centers that you have. And the problem, and what most people think of, is they see all of the potential problems with single family rental properties. Like, they'll say things like, oh, I don't want to get a call late night. I don't want to be a landlord. I don't want to deal with that hassle. They only see the negatives, and the positives are a little bit complex. They're a little bit hard to understand. So I thought I'd just share a little bit about those 5 profit centers today, so everybody can kind of get a basic understanding of what makes this asset class so beautiful. And if you have additional questions, please put them into the comments. I'm going to make sure I have time at the end to answer any questions you may have. And there's a number of ways you can continue your education here with American IRA or with JWB. So we've got these 5 profit centers. All right. Number 1 profit center, net rental income or cash flow. This is the one that most people tend to focus on and understand. And net rental income simply is taking your gross rents, the amount of rental income that comes each month, and then taking away your expenses. And what are you left with each month? Well, that's really important. We need this to be a positive cash flow experience. And there's not many assets that actually get to produce positive cash flow. So positive cash flow, net rental income, it's the same thing. That's the first, and that's probably the easiest and most talked about profit center. The second profit center is tax savings. Now, tax savings, we're here talking about retirement account investing. You can invest in single family rental properties inside your retirement account. You can also do it outside of your retirement account. The benefit of doing it inside your retirement account is that you already get these beautiful tax advantages of tax-free or tax-deferred growth. That's why we love working with our folks over at American, because we're unlocking this asset class, and it's something you can put into your retirement accounts. If you invest outside of your retirement accounts, and what we would call is just kind of you can get normal conventional ways of buying those properties, well, then they have significant tax advantages there. Namely, depreciation is your best friend when it comes to tax savings. And so depreciation helps you write off the taxes, or helps you write off a large expense, and that decreases what you pay your taxes on. So I'm not a CPA. I'm just a real estate investor who's been doing this for 20 years. If you have any more questions on the taxes side, talk to any CPA. They'll tell you buying single family rental properties is a great thing to do from a tax savings perspective. Next, we have principal paydown, and this is beautiful. Principal paydown is where your residents, or others may call them tenants, we call them residents because that's the way we aim to serve the folks that are living in the homes that are renting our homes. But our residents are actually paying our loans down for us. And you can get loans inside a retirement account. You can do it outside of a retirement account. But either way, when the rent is being paid, it's not just producing that monthly positive cash flow for you. It's also paying down your loan for you. And over time, this really stacks up. It might stack up to $10,000 or $15,000 of additional equity, and you might not even realize it. You check in after 5, 10, 15 years on that loan, and you're like, wow, I owe a lot less. Well, you didn't pay that. Your resident paid it down for you. So that's the third profit center. Your fourth profit center is home price appreciation. And man, have we all as a country seen the effects of home price appreciation, right? If you were an investor and you bought single family rental properties in the year 2020, you've experienced way more home price appreciation than normal, and it has absolutely produced an incredible return on investment for you. But here's the thing about home price appreciation. What many people don't understand is that it's cyclical. And so it's based on supply and demand. It's based on affordability and other challenges or other opportunities that we see in the real estate market. And over time, if you give it a full cycle, either a 10 to maybe 20-year amount of time, what you'll find is that your home price appreciation levels are predictable. You can go back over segments of time and say, you know what, if I put an estimate for what the home price appreciation is going to be, and I gave it a 10 or 20-year cycle, I'm going to be pretty darn close to what that home price appreciation level is. And so now that we know that, we can actually choose markets that appreciate more and say, you know what, over time, if there's a market that appreciates at 5% a year versus one that appreciates at 3.5% a year, wow, I'm really going to maximize my return on investment. And all that information is free and publicly available. and you can understand where your market that you're thinking about investing stacks up with others, again, knowing that you're going to be investing for a full market cycle, call it a minimum 10 years, well, you can count on home price appreciation. Just like I was able to count on home price appreciation in 2006 when I started buying, even though it was probably the worst time to invest from an appreciation perspective. As we know, those markets, the real estate market rebounded and again has done quite nicely. So home price appreciation will be your biggest profit center. It will be the thing that grows your profit pie the most. And it is predictable if you're in the game for a full market cycle. And then the fifth profit center, one that most people don't really think about at all, is inflation hedging and inflation profiting. And we have this beautiful asset class, like I share often. And inside this beautiful asset class is its own hedge against inflation. You might hear of other assets that say, oh, well, we can hedge against inflation, or we can hedge our bets against something. And that typically means you have to go and buy some more stuff in order to hedge against the stuff that you already had. But in single family rental properties, we are our own hedge against inflation. And what that really means is that as the cost of home building and the service and the materials that go into home building go up with inflation because the cost of goods and services go up, what also happens is rents go up and home prices go up in a similar fashion. And so you're hedging against that inflation. And that's why the wealthy and the savvy try to own hard assets like rental properties. And in addition to that, if you can put yourself in a position to be the borrower, to take out smart debt, now you can profit from inflation. And the way you do that is you simply take out the loan today and you pay it back in less valuable dollars because inflation erodes the value of the dollar over time. So this is actually a really good thing. It's kind of a complex topic. So again, if you have additional questions, again, you can fire them in now. I'll be happy to answer those towards the end of the phone call, or there's a number of different ways you can continue your education or reach out to us at JWB and be happy to walk you through that. So there are your 5 profit centers that kind of form the foundation of my love of this asset class and hopefully either your current love or your future love of this asset class. We've got net rental income, tax savings, principal pay down, home price appreciation, and inflation hedging and profiting. There you go. All right, so now that we have our baseline of understanding what makes this asset class great, I want to share this new and probably something that you have never heard before strategy when it comes to investing in single family rental properties. And I'll share a little bit of a story about us here at JWB. You know, we manage about 5,600 single family rental properties. We do all the property management in-house. That means that we serve about 8,500 to 9,000 residents that rent our homes. We also build between 300 to 400 homes a year. So we're one of the largest builders here locally of building new construction homes. And all of those homes become these beautiful single family rental properties that, you know, then our residents rent and then we sell to clients as a part of their portfolio. And we have a team here of 130 people, and we're focused on one market. So we're probably different just in that respect. There's a lot of real estate companies that go national. We have felt what the best strategy has been for us has been to go a mile deep rather than a mile wide. We kind of stuck our flag in the ground here in Jacksonville about 20 years ago, and we said, you know what, we can create more opportunities by going deeper and stronger into one market. And we can reduce the risk for our clients by going in one market and truly leveraging all of our relationships over 20 plus years to create a better asset, a better experience for our clients. We said that we could do that. And so that's been our mission. Well, about 5 years ago, we were looking at ways that we could create an impact bigger than we ever had before. And so we started to look at what we could do to create a great impact for our residents, those who are renting from us, for our team, for our community here in Jacksonville, and for our investors. And this led us to starting to look at what the effect of a growing downtown would be. And we're pretty involved and connected here here in Jacksonville. So we started to learn about these tours that our leaders here in Jacksonville would go on to other successful downtowns. And so we went to Tampa, and we went to Cincinnati, and we went to Nashville, and we went to Austin, and we went to all of these successful downtowns. And we said, wow, not only are there more amenities and jobs and higher median incomes, but what happens in those successful downtowns is you look at maybe within a 10-mile radius around those downtowns, and those cities that have those successful downtowns are the highest cities for home price appreciation and rent price appreciation and median incomes. And so we started to put the pieces of the puzzle together. And, we have the opportunity to create impact across tens of thousands of people when you think about our residents and our vendors and our team and our relationships in the real estate community and our clients. We sit in this really cool spot. And we said, you know what? This is the thing that we can do to drive impact for everybody, right? Now, for our residents, there's going to be a better quality of life. Our community, better quality of life, better jobs, if we can be a part of this growing downtown. And for our clients, many of our clients do not live in Jacksonville. And we said, you know what? Folks that are investing, putting their money in Jacksonville will benefit as well, because they'll see higher home prices and higher rents and higher median incomes. And the residents are going to be happy, and they're going to stay longer as well. So that was our big aha moment in 2020. From that point, we decided to be a big part of the revitalization of downtown Jacksonville. And if anybody would like to Google downtown Jacksonville and JWB real estate capital, you'll see a ton of articles. And really, we said, you know what, why not us? Why not now? So what we did is we started to buy property. We went downtown. We bought about 20 city blocks in downtown. That's about 12% of the north bank of downtown Jacksonville. We raised all of the money. We raised over $200 million to be able to support this venture. And we found investors that were local Jacksonville investors that wanted Jacksonville to be great and had patient money as well. And we did all this under the radar. Couldn't tell anybody. It was kind of like when Disney was being created back in the day. If anybody knows that story, they had to go out and buy these tracts of land and not let anybody know about it. Well, that was kind of what we were doing in 2020. And we did all this. And then we needed to find the team, because, JWB is a world-class operator of single-family investments and property management. We are not the right team to manage the day-to-day of revitalizing a downtown and being a pioneer there, but we knew who was. And so we were able to go and find others that had done exactly what we needed to do in Jacksonville and other downtowns. A gentleman named Brian Mull was the second in command in Tampa's Water Street district, which, if anybody is from downtown Tampa, you know that downtown Tampa has been revitalized and is a wonderful example of how downtown revitalization can improve quality of life and home prices and rents and median incomes in the Tampa area. And Brian came here and is now the CEO of our collective project, which is called Gateway Jacks. And collectively, Gateway Jacks is what I'll share a little bit more about it with you, but that is one of the 3 pinnacle projects that is driving downtown Jacksonville. So we're all in. We've been all in for Jacksonville since the very beginning, but this downtown opportunity now creates the biggest opportunity to drive success for literally millions of people in millions of people in Jacksonville, and tens of thousands of people that we can directly impact through JWB's efforts. So I've got some stats and some data that I'm going to share with you just about how much of an impact this can be. And then what I hope to do by the end of our time here is to kind of connect the dots where you can see, as an investor in single family rental properties, how can you ride this wave of home price appreciation, rent price appreciation that's coming in Jacksonville and not take any additional risk. I think that's really important. So, Colton, we're going to go ahead and get the slides going here. Should I just go ahead and share the screen now? And I don't know if I can even talk to you, if you're even going to talk back to me. But you know what? I'll just let it rip. You just let me know. All right, gotcha. All right, so I'm going to go ahead and share this screen, and let's see here. All right. And we'll go into presentation mode. Okay. And I believe you guys can see me here. Let me just make sure. All right, there we go. Colton, can you just give me a thumbs up or a yep if everything is good from the viewer's side there? All right. And you know what? Let me go into the comments here. Oh, I see all the comments here. This is great. Yeah, if anybody has any comments or questions, go ahead and fire those in here right now. So it looks like we are doing well. All right, so I'm going to challenge everybody on our call here today to think a little bit bigger, right? Single family rental properties, I love them. Hopefully you love them too. But I want you to think a little bit bigger, because a strategy marrying successful single family rental property investing with the next great American downtown can be something that can maximize your returns while not increasing your risk. Everything I share with you today is based on data, but I would absolutely encourage all of you to do your own due diligence, because I'm going to be using some numbers here. I want you to know that expected returns on investment are estimates. They are not guaranteed. If you're thinking about investing, you should surround yourself with people that you trust. And I hope this is the beginning of the education journey, or continuation of the education journey for you. This is not the end. Surround yourself with those who you trust before making an investment decision. I'm not a financial advisor. This is not financial planning advice. But this is a little visual of the team here and a little bit about our company here at JWB. I shared a number of these stats ahead of time, but the strength of any investment is the team that supports it. And if you're thinking about investing in rental properties, please work with a team that has a real office, that has 100 employees, that is here to serve, that's been doing it for 20 years. There are so many people in the real estate space that get into selling investment real estate by accident. It wasn't their original intention, or property management by accident. Please be intentional with the person and the team that you choose to invest with. And if I can leave you with maybe just one thing to write down as far as finding the right team for yourself, make sure the company that you are buying the property from, or the person that you're buying the property from, is also the same company that's collecting the rent. The same company you're buying it from needs to be the same company that's collecting the rent. Because when you do that, you eliminate the blame game. You eliminate pointing fingers. Everybody has goals aligned when you connect the salesperson with the person collecting the rent. So keep that in mind, and that's really what a vertically integrated team is. They have all aspects under one roof. That's a big part of what JWB's value proposition is. And again, if you'd like to learn more about our company, I'll share our contact information at the end. But investors love this path of progress. Okay, so investors do love the what I call the boring nature of single family rental properties. Right, boring meaning it's predictable, it's consistent, all of that. But every investor out there wants an edge. They may say, "Oh yeah, I like that investment property, but I want it next to the next great shopping center, or the next grocery store that's coming in, or the next great school system, or whatnot." They're looking for that edge. And the reason that they're looking for that edge is because in their minds, they're like, I'm going to see more home price appreciation, and I'm going to have better returns on investment because of that. So I love that we're all looking for an edge, but what I would offer up to everybody is we're probably looking at edges that just are not the right ones, right? So for example, like a shopping center, is that really going to dramatically improve your home price appreciation over time? Maybe, maybe not. If you stretch and buy a poor property, or get it managed by a poor team just to be next to a shopping center, is that a trade-off you really want to make? Probably not. Same thing with school systems, right? So what I would offer up is we need to be thinking about what is the biggest and most profound opportunity to increase your rate of return while limiting your risk, and something that actually makes sense that it's going to drive home prices up. And that's, of course, this next great American downtown that I've been talking about up until now. And here's some of the data. We started to look at these revitalized downtown cities as we started to go to some of these cities and ask their city leaders, how did you do this? What did you see after your revitalized downtown became the success story, like Denver, Austin, Nashville, Tampa, Dallas, Seattle, Charlotte, Boise, San Antonio? These are some of the most fun downtowns to go to now. And what we realized through those city leaders and through the data that has come out over the last 20 years is that these revitalized downtown cities have appreciated 89% more than the US average since 2005. Okay, we know since 2005, there have been some ups and some downs, right? We've had a ton of run up over the last 5 years. There was the Great Recession, but that's 20 years. And what we're seeing is dramatically almost double the amount of home price growth in these revitalized downtown cities versus the US average. There's got to be something to that, okay? We looked at Nashville, Austin, and Tampa specifically because we think those are the best comparables to Jacksonville. And what's really interesting is that in 2005, Nashville, Austin, and Tampa all had lower median home sales prices than good old Jacksonville. But as you fast forward now, and this is from 2024, it's the latest annual home prices that we have here, right? Nashville's home price is almost $500,000. Austin's almost over 440,000, and Tampa's 386. They have shifted from being below the U.S. average to many times above the U.S. average. While looking at my beloved Jacksonville here, yeah, we've kind of gained ground on the U.S. average, but we haven't seen that spike. So what's the difference between these three cities and my beloved Jacksonville? Well, these three cities and the other cities that I showed on that graph there, they all have downtowns that became revitalized in the early 2010s. So the question then became, how can you spot the next great American downtown? If we can spot and know what to look for the next great American downtown, and we know the time before it starts to really pop, well, then that might be a great time for us to invest in single-family rental properties. So that's what we asked all of these city leaders and all these other successful downtowns. How did you know? When did the investor dollars really start rushing in? When did skyscrapers really start getting built? And we got really good information. And what they shared with us was that there's this critical mass of 10,000 downtown residents that they needed to get to in their downtown. And somewhere around there is when the numbers started to pencil out so that developers could come in droves. And prior to 10,000 residents living downtown, it was really hard for developers to make the numbers work. You didn't see a whole lot of skyscrapers being built in those days prior to reaching 10,000 residents. And the reason is because the only way that developers usually come in, if there aren't enough people living downtown, is they have to get city incentive dollars to do it. And that can work, but it's slow and it is a tough process. And then, many times there's the public that doesn't necessarily like incentive dollars going to big wealthy developers. And it's just, there's a lot more work to do it. And there are some early pioneers that are willing to do it, but not many. But you need those early pioneers because that starts the flywheel. And then once you hit those 10,000 residents living downtown, well, that's where those city incentive dollars are no longer needed because the rents have gone up, median income has gone up, people are living downtown, so they're frequenting the establishments. And then all of a sudden, these big developers look at that next great American downtown and they say, you know what, I want to go there. And all of a sudden, the numbers pencil and they can do it without incentive dollars. So this critical mass of 10,000 downtown residents is something that if you go to other successful downtowns, you ask them, how did you know when it was successful? They'll mention this critical mass number. So now that we knew that, we said, okay, well, we think that just like Austin and Nashville in the early 2010s, we think that Jacksonville's home prices can go up dramatically and the rents can go up dramatically, median incomes can go up dramatically if we just understand how far we are away from 10,000 residents living downtown. And at that point, we said, well, we're all in. And so we started to acquire that land. I'll take you through a little bit of a downtown case study in Austin, Texas. By the way, I went to Austin in spring break of this year with my family. So fun. What an amazing city. And when I was down there, I asked people, what was it like 10 years ago or 15 years ago or 20 years ago? And they said, not like this. Many parts of downtown were not places that you wanted to go. I could have never imagined that now. And that's how quickly and how fast this can change. But in Austin, the start of the rapid growth in Austin was when they hit about 7,600 downtown residents. And after hitting 7,600 residents, the population of downtown Austin grew 101% from 2010 to 2024. And you can kind of see this on the chart. This chart is mapping out all the way going back from 1990 until 2024. You see the significant growth in the resident population. They now have over 15,000 residents living downtown Austin. But it's interesting, I mentioned 10,000 residents. Well, we started to see this. 7,600 is the big jumping off point for Austin. And then we said, okay, well, let me look visually. What does Austin look like today versus what it looked like in the early 2010s? And you start to see this amazing growth that has happened in a very quick amount of time, right? In 2012, there were some skyscrapers, but in May of 2024, a whole lot more skyscrapers filled in. Only 12 years there. So once you hit that critical mass, it happens very quickly. The next downtown case study is Nashville, Tennessee. I actually just went to Nashville last week with my wife. We went to go and visit Nashville. I love all these amazing downtown revitalization stories. And I asked the same questions in downtown Nashville. What was it like before? And the wonderful tour guide that was taking me around told me about how downtown Nashville really was not the place you wanted to go before the city incentive dollars and great leadership from the public sector. And then some private companies came in and started this flywheel, which is exactly what we're seeing in Jacksonville. So in Nashville, it was about 7,300 residents was the start of the rapid growth. And once they reached 7,300 residents, that was in 2013, the population of downtown Nashville grew 174% from 2013 to 2024. There's now over 20,000 people living in downtown Nashville. So if you could go back in time and invest in one market in 2005, and you had any market to choose from, the best place for you to invest in terms of home price appreciation and growth was actually Nashville, Tennessee. It has the highest percentage growth of home price appreciation of any market in the country. And it is absolutely correlated to this downtown growth. So we saw 7,600 residents for Austin, 7,300 residents for Nashville, and it became clear to us that 10,000 is not the number when you need to start investing in single-family rental properties around these downtowns. It's a little bit before. It's right when you see the writing on the wall. And here's what downtown Nashville looks like today versus just less than 10 years ago. And I can tell you, I walked through Broadway. There is something going on at all times in downtown Nashville. It was way too active for my wife and I. We are way too boring for it. But there is always something going on. And just look at the skyline. Look at how much it changes just like that. Think about you owning single family rental properties around that type of downtown explosion. And here's where we are for Jacksonville. Jacksonville has 7,600 residents currently. Does that number ring a bell? Okay. Our resident population has grown 47% in the last 6 years. And our downtown resident population is expected to grow 135% by the year 2030, a very similar trajectory to Austin, Nashville, and these other successful downtowns. But the best part of it is that it hasn't happened yet. There's $8 billion of construction going on in downtown Jacksonville. And I'm just giving you a map of downtown here. There's no way you're going to know anything about this, but I just want you to see all of these projects are either started or completed or in process right now. And there's $8 billion of those projects right there. That's our downtown right there. There's a beautiful St. Johns River that goes through it. And there's a lot of activity going on right now, but people don't understand what this means as far as job growth, median incomes, home prices, rents. That's what I get to share. That Pearl Square project or the Gateway project that I mentioned, the name of the revitalization and the neighborhood that we are creating in downtown Jacksonville is actually called Pearl Square. So again, if you want to Google it, Google Gateway Jacksonville, Pearl Square, downtown Jacksonville, JWB, you'll read tons and tons of articles about this. This is one of the largest urban core revitalization projects ever in the United States. We broke ground in 2024 with our first building. Our second building broke ground in May of this year. And then some super exciting news that I've just recently been able to share is that we just signed our first premium grocer in downtown Jacksonville. That is Publix. And if anybody on the call is from the Southeast, you will know the premium Publix brand. And so Publix is leasing 31,000 square feet here in Pearl Square, our project here in downtown Jacksonville. We couldn't be more excited about it because when a premium grocer comes downtown, that's when everybody else signs up these letter of intents, these leases, all of these amenities, bars, restaurants, other retail continue to come in because that's a major milestone. So they're signed, and we expect Pearl Square overall to be completed in 2028. It's a $2 billion development. It will have over 1,250 residential units, 200,000 square feet of retail, and will bring $750 million a year in economic impact to our wonderful city. And that $750 million a year of economic impact, that when we started this idea 5 years ago, we said, how do we create the biggest impact? That is a numerical way to kind of to talk about it, right? But it's a lot more than that. It's quality of life for our residents, and of course for our investors who we love dearly. Even though you don't live in Jacksonville, your returns on investment will do quite well because of it. Here's just a few snapshots. I'm going to give you a couple of visuals of what it looked like before. This is one of our city blocks in Pearl Square. This is before we started the construction. This is during construction right now. So our first building is actually wrapping up. I think I need to get a new picture here because this one's a few months old, but our first building will be wrapping up in 2026. And you can see that construction is going on. This is what it will look like when that first building is done. This is the same picture rendering going forward. And this is the type of space that we're going to be creating, these living, walking, green spaces, places where people want to be. Because if you can create spaces where people want to be, they're going to spend money. They're going to choose to live around there. They're going to go there. They're going to take their families to go out to dinner there and whatnot. And that's how you create this flywheel of economic prosperity. Here's another parking garage that we own as a part of Gateway and a part of the Pearl Square project, but we're going to be activating it. It's going to look like this. This parking garage will be slated for this construction here, either 2026 or 2027. But you can just see we're taking existing assets and we're making it a place that people want to hang out. Overall, this is the we do have 25 city blocks now for Pearl Square, but this is the section of Pearl Square that is, you're going to see the most activity here. Those numbers, those letters and numbers are different buildings. That's how we name them. So N11 is a building, N9, N4. And this is what it looks like in downtown Jacksonville right now. It doesn't look great, right? There's a reason why we're coming in here and redeveloping this entire city. We have been a city in downtown where there has been a lot of vacant buildings. And we have been a city where we just haven't realized our potential downtown for many, many years. We chose to look at that as a blank canvas. So that's what I see here as a blank canvas. You may see this as something that says, looks a little bit like, I don't know, not a place that is very lively. And both of those are true. But this is what Pearl Square will look like when it is fully built out. And it's going to be soon, guys. 2028 is when the completion is going to be for the Pearl Square project. So how can you use this information to earn the best risk-adjusted returns on investment? I'm sure by now you guys know that I am not suggesting that you go and invest in downtown buildings. This is the nuance of the message that I love to share. You can invest in something that does not increase your risk and still get the indirect benefits of it. So if you were thinking, hey, well, how do I go and buy buildings in downtown Jacksonville because I see what's going on, Greg? Here's what I want to prepare you for. This is what we did. I can tell you it's a different risk profile. Requires millions of dollars, does not provide positive cash flow. There's a lack of control. Not everybody can do it. Your capital calls are frequent and expensive, a long time for payback, and you're a pioneer. You're not following a proven system. So if that sounds like you, go have a ball and buy some downtown buildings. But that's not our clientele, right? Our clientele wants simple, repeatable, something you can build your retirement off of. And that's where we combine these beautiful single-family rental properties that we've been investing in for 20 years in the same neighborhoods in Jacksonville with this impact of the next great American downtown and the prosperity that it brings. So you can invest in single-family rentals surrounding the next great American downtown. what you'll see is higher home price appreciation, rent growth, median incomes. You get all the upside of this revitalized downtown, but you still enjoy this risk mitigation, this simple, repeatable, beautiful asset class that we all understand. And when the rents come in every single month, it pays for the mortgage, it pays for the expenses. You don't have to take these huge risky leaps. But again, you get the benefit there. So this is our strategy. JWB clients get to invest within about 10 miles of downtown Jacksonville. We know it's the next great American downtown, right? All of these little blue dots that you see on the screen here, these are all properties that JWB clients own and that we manage for them. And that box right in the middle there is downtown Jacksonville. You'll see that our neighborhoods are very, very concentric around that downtown. And that's on purpose because this is the greatest way to increase your risk-adjusted returns, in our opinion. Again, if you go back to Nashville in the early 2010s, you'd probably buy as many rental properties as you could. And this is really about sharing that opportunity with all of you. We really believe, I believe, because I've been saying it for many, many years now, that this is a unique opportunity. You don't often get this opportunity where the writing is on the wall, $8 billion of construction going on, and seeing all this happening right now. You don't often see that moment where the writing is on the wall, and you also have these examples that we've seen over the last 20 years of cities that have done this. And now you can position yourself as an investor to take advantage of that by buying these single family rental properties. Guys, I write basically a little book every single quarter for our clients. It's our Jacksonville real estate market report. And I wanted to make it available for everybody on the call today. It's free for everybody here. It's a pretty lengthy book there, right? You got a lot of pages. There's a lot of data. If you're interested in learning more about Jacksonville, specifically the effect of downtown, if you'd like to understand what's going on with prices here today, rents here today, and property management statistics, go ahead and download this. You can go to jwbrealestatecapital.com/American IRA. And I would encourage you to do that if this is something that you're really interested in. Do that. And you can also check us out on additional ways that we continue to keep our clients updated. I host a podcast and a show called the Not Your Average Investor Show, and we would love for you to join. You can go and join us. We do it every Tuesday at 12:30 Eastern. And if you'd like to join us in the show, it's free, of course. You can join the show audience for free. Just go to nyais.com. And Kyle, I think that's all I got, my man. What do you think?
That's all we get is just that.
I could go on for days, man.
I know, folks. I'm being quite facetious on this because as I'm listening to this and being in the business as long as I've been in, and been able to house clients who are always wanting to get as creative as they possibly can with their self-directed accounts. This was an immense amount of education that you've got today. And again, it's just a snippet of what Gregg has been doing for really 20 years. I think one thing to look at too is, Gregg didn't come from this kind of background. And look what he has amassed. Now, look, results aren't typical in everything. And what Gregg will tell you, and what a lot of you also understand, is that it takes a lot of work and a lot of hours. Okay, that's the other thing that people need to realize, and especially when you're doing your investing. The other thing that it's important to know with your investing is that it's not what you make, it's what you keep. And so the one thing that I did take away from the beginning of Gregg's presentation is when he's talking about, really just hold on. Once in a while, I'll get folks that will talk to me about, it sounds like, they're quick. They're wanting to, to buy and sell. This isn't really the fix and flip, where there's money in that as well. But someone's like, well, what happens if, my property might lose value, or if a tenant has to move out, how does that work with my self-directed IRA? Do I need to go ahead and look to do something else? Or, what about my price value or something like that? And it's like, well, like what Gregg was talking about earlier, you've got to look big picture and down the road, because you're not doing this with your savings account. You're not doing it with your checking account. You're doing it with a retirement account. And quite frankly, it's not even your property anyway. It belongs to your retirement account. So in any of these, and he just showed you examples, Where has any of this dirt dropped in price in the past decade? Okay. So properties are going to increase. And if that is inside of your retirement account, whether you've got residents in there that are paying the rent every month, that again, is going to be tax free at the end of every year as long as it remains in your retirement account. And then one of these days down the road, 10 years, you sell the property. Well, then you've had all of that income over all those years that has remained in your retirement account tax free. And then if you were to turn that property in 10 years, well, then all of that profit is coming back into the account tax free as well. At that time, I mean, obviously, everyone knows that if that's going to be in your self directed traditional IRA, you're going to get taxed when you take those funds out in the form of a distribution. But folks, if you do that inside of a Roth account, you're never going to pay a dime in taxes on any of that profit as well. And so I would say that the strategy or really the the when you're talking about the properties and the profit center that probably means the most to our clientele. Yeah, everybody wants the cash flow so that they're safe for the now, but really in that future one, Greg and I've talked about this in the past, is really that tax savings on it, because that's really going to be the name of the game. And that's why people are using retirement accounts. So always remember too, that you can get this and other education at American IRA's website at www.americanira.com. Feel free to follow us on your favorite social platform, Instagram, YouTube, and Facebook. Give us a like wherever you see us. Any of the videos and podcasts, like the one that we did with Greg, are up now on our YouTube channel, and so will this webinar be there as well. We always look forward to you joining us. Keep an eye out for the next presentation that we will have for you. But for now, and for Greg and for everyone here at American IRA, I'm Kyle Moody signing off from the IRA Cafe powered by American IRA. Thanks so much. We'll see you next time.